Hey guys, this is Market Update. I want to focus on 2 points in this video. The first one is the sentiment that the cycle's over. And then the second one, longer term, is that cycles aren't going to exist anymore. I disagree with both of these points. Bitcoin is really frustrating right now. For almost a year, we've essentially gone sideways in the price. So we hit that all-time high above 100,000 almost a year ago. Now, we had a lot of volatility in between, but the price is essentially the same, right? And so a lot of people get bored and say, well, the cycle's over. It's just completely different, but I don't believe the cycle's over because Bitcoin's price versus the dollar, which we're looking at, is reliant upon the dollar cycle. The dollar cycle isn't over. The Fed is just going to start cutting rates again, right? So the dollar cycle isn't over. And then to say cycles are over, completely disagree. Again, the exchange rate that we look at every day is Bitcoin versus the dollar, so we're looking at dollar cycles. Dollar cycles aren't over. Debt cycles aren't over. They exist. And Bitcoin is extremely sensitive to them. So I disagree with both of those sentiment points that are happening right now. I don't think this cycle is over because I don't think the debt refinancing cycle is over for this cycle. And I don't think cycles will go away because Bitcoin is simply a representation of the amount of dollars in existence, the year-over-year change in liquidity, the year-over-year change in debt creation. That's not going away. In fact, it's being entrenched further and further. So I still think this cycle goes higher and I still think cycles exist. And so for me, even though it's super boring right now, right? It's 111, which we basically hit a year ago. I think there is a movement upwards. You can see if you go down into the shorter time frame price action, these are a series of higher lows, right? And so that shows that buyers are here in the market. Any weakness, they just come in, they come in. So there are buyers here. There's liquidity here for Bitcoin. And I think the cycle changes once the Fed starts lowering rates, and it seems like they want to ease liquidity again. So I'm long, I'm strong, and I'm buying dips. Like I said in previous videos, this is the daily chart now. Essentially, this consolidation zone right here, which is the 100K consolidation. I still think, actually, if you look at price action, we're basically in the 100K distribution zone, right? The OG holders distribution zone, you can see that here. These are whale addresses actually coming down. There are whales, individuals, OGs who are just selling tons of BTC. They do this every bull market. That's the hallmark of a bull market, is to let some go. But what we can see is a huge rotation from individual holders into corporate entities. That's fine. That's a bull market. But that 100K, I think, is a key level where you've just got so many new buyers, corporate buyers coming in at 100K, comfortable to pay triple digits. And so I would say that's a very good level to buy. If they're comfortable paying this, they're going to be, buying a lot lower if it goes there, and they'll be buying a lot here. And this will be a springboard for when eventually those OGs run out of the supply that they want to sell here, right? That next leg higher, which is what I want to do. So I've actually got bids in basically for this right here. If we get down, I've had a few bids hit. I've got some more here if we do go lower. 111, it's not exactly weak price action, right? But I've got my bid still in here. So I want to bid this because I do think this cycle continues and we go higher. If you trade crypto, check out Bybit. Link below will give you a deposit bonus all the way up to 30K. Whatever you deposit, they'll give you a deposit bonus to trade with. If you can't trade on Bybit, check out Apex, which is a decentralized exchange spun out of Bybit. Just connect your wallet and trade. There's a deposit bonus on there as well and a 10% permanent fee discount via the link below. I think cycles will persist and I think this cycle isn't over. They're the two questions, right? Because I think people give far too much attention to Bitcoin and not enough to the other side of this trading pair, which is the dollar. It's actually the dollar that's the important thing. It's actually the dollar that I'm trading. When I say I'm going long Bitcoin or I'm buying, the trade is short dollars, not long Bitcoin, right? And I'll explain. Bitcoin exchange rate versus the dollar. That's what we're looking at right here. Bitcoin has an inflation rate of 1.8% right now. That's going to get cut in half to 0.9% in the next halving. It doesn't matter. The dollar is 5, 6, 7, 8, 9% inflation. The year-over-year change in the creation of dollars is the important thing in this currency pair, not Bitcoin. Bitcoin is basically fixed. It's the dollar that's volatile. It's the creation of the dollar and the market's expectation of dollar creation that's actually the important thing that drives this price specifically, which is dollars versus Bitcoin. It is the dollar cycle that I'm trading here. And it's the dollar cycle that's going to persist. So 2 questions. Will this cycle persist? Are we at the absolute peak of liquidity forcing into markets? I don't think so. The Fed is going to start cutting interest rates next month or this month, right? The US government wants to force dollar creation into the market. all of their trade deals and everything. That's what they want. So they want that to happen. I don't think this cycle is over for the dollar. The other question, will cycles persist generally? Of course they will. The Bitcoin cycle is going to continue, but is less and less relevant. You're looking at the dollar cycle. Look at strategy. What's happening on Bitcoin right now? Leveraging Bitcoin. Strategy is taking out dollar-denominated debt on top of Bitcoin. They're entrenching the dollar cycle. The debt cycle is not going away, right? Governments, corporates, they're in this huge refinancing cycle every 4 years or so. That's not going to go away, right? Debt is not going to go away. It's going to be entrenched over time. It's getting entrenched on top of Bitcoin as well. So are we at the peak of this dollar cycle? I don't think so. You may disagree, but are cycles going to go away? No, the dollar cycle will not go away. Debt is not going to go away. So it's going to have an influence, what we're looking at right here, which is the dollar exchange rate. This price right here, right? I want to go long. I'll tell you why. This is the trend rate of growth in orange. Last cycle, we got 300% above it. Right now, we are, let's say 50, 60% above it, right? So the risk reward here, I think, is to go long, because what's a drawdown? Are you going to get a 60, 70% drawdown from here? That's unlikely, right? Why would you go up just 60% above the trend rate and then draw down that much? That doesn't usually happen. What usually happens is that the price actually outperforms the trend rate by so much, and it gets so overbought, for example, in this little red box, that the drawdown can be 70% just to take it more or less back to the trend rate, as you can see here. So that up here would be a bad risk reward trade going long with leverage. Here, the risk reward is, I think, to the long side, right? Now down here is the best risk reward, but we're just not there anymore, right? So you have to ask yourself a question, what are you doing here? You buying or selling? I think we still buy. As we get up here, then you start to roll out because the risk reward changes. But the dollar cycle is not over for this cycle, and that means we can go higher. And if we don't, and if we roll down, back to the trend rate is a 40% drawdown. I can handle that, no problem, right? So you're going to draw down for a bit, and then what? We're not at the peak of this dollar cycle, right? We're not. They need way more inflation. The Fed's going to start cutting. They want to just pump markets again, right? Debase debt. That's the whole cycle. So yeah, this cycle, I don't think it's over, and cycles will persist because it's the dollar cycle that will persist. Bitcoin cycle is less and less relevant with the halving because the amount of supply, between 1% and 0.8% doesn't really matter. What we potentially have coming towards the end of this year, which may come out maybe over the next few years or so, is banking deregulation. So the game here, right, is that currency has to be created. We know that, okay? You can't have deflation in prices. We price everything in dollars, the world reserve. So everything is priced in dollars. The price of everything must rise, valued in dollars, right? Otherwise the debt system collapses. So you do need currency creation. Now, where is that currency creation coming from? The private market doesn't create enough new currency anymore, which is why the government run deficits. It's got nothing to do with tax. There needs to be an amount of currency created every year. And so the private market isn't creating enough. What the Trump admin wants to do is incentivize the private market to create more currency so it takes the burden off the government. Will that work or not? I've got no idea, but that's what they want to do. They want to deregulate banks to create more currency creation from the private market. They've said to other countries as part of their trade deals, use your world development banks to create euro dollars, create dollars outside, pump them in, right? The game is create dollars, pump prices, and the Trump admin wants the private market to do that more and take the strain off the government. In any case, whatever the shortfall is, the government will pick up the tab. So this is M2 money supply. It doesn't matter who's in charge. The amount of currency in circulation must rise over time. As you can see, we're now measuring this in multiple trillions per year. Tariff revenues are cancelling some of that money, but you're looking at 30 odd billion in August. So let's annualize this to 300, 400, 500 billion. It's a decent chunk, but it is nowhere near any of the metrics of actual currency creation and the amount of deficit they have. So it's definitely a tax. It is a tax, right? This is payment of tax to the Treasury, which is great, but it's not paying down any of their debt, right? Their debt is still increasing. But what they want to do is to incentivize the private market to create more currency, to create that inflation from the private markets, and that hopefully takes some of the strain off the US, which is what they want because the debt burden is so high. The amount of currency that the government has to create is so high. So look, currency gets debased. 5-year losses versus BTC. this will persist, this will continue, right? That's why we're in Bitcoin, right? It's because we know that the game is, whether it's the government picking up the tab or whether they try and incentivize the private market, they need currency creation. It's not about tax. You can't tax your way to paying off the debt. It doesn't work like that, because if you're taxing, what you're doing is canceling that money, creating deflation, because the amount of goods and services is now priced in less currency. Less currency means deflation in those goods, which means the previous debt becomes unpayable. You need currency creation. They want to incentivize the private market to do it. It doesn't matter. If the private market doesn't, they'll pick up the tab and they'll be creating more currency, right? Doesn't matter who's in charge. That's what must happen. That's why we're in Bitcoin. Bitcoin is the fastest horse in this race. It is actually fixed. Nothing else is. So that's why we're in it. And even though we've gone sideways for 12 months, we're in a specific distribution at 100K. I get that. But this debt cycle, this currency cycle isn't over for me. So remain long, because we're not actually massively overpriced in relation to the trend of Bitcoin. When we're talking about the trend of Bitcoin, what we're also looking at is versus the dollar, right? The dollar will have 7, 8, 9, 10% debasement over the long term, which is that log graph as well, right? So yes, Bitcoin has adoption, but the exchange rate versus dollars is also dependent on dollars. Whoever has to create the currency will create the currency. They want banks to do it more, great, but it will be created and the shortfall will be picked up by the government, which means currency creation, assets, price that in, including Bitcoin. Apparently you can create diamonds in a lab now which are chemically perfect. They have the exact same structure as naturally formed diamonds, and so the price of diamonds is crashing. And this is a perfect example of how humans create abundance. So there is a demand in the world from humans, and then other entrepreneurs come in, figure out through intelligence and hard work how to supply more abundance to that market to supply the demand, right? And so the price will go down. This means that the things we desire are going down in price. That's actually a good thing, right? And so I want to just compare that to Bitcoin against gold, because gold has done very well this year, but gold has done very well this year valued in dollars. Not so well versus Bitcoin. Bitcoin is underperforming gold a little bit this year, but we're talking about this candlestick right here. And you know, the year is young, right? We've still got a long way to go in this current cycle, I believe. But on the margin, if we believe that Bitcoin is absolutely perfect for its job, which is to measure the world, it's not for payments or anything of that, right? It's literally just this network must remain secure and remain fixed in supply so it can measure everything else. Bitcoin is the denominator, and it should be. What we're looking at is Bitcoin versus dollars most of the time, but dollars have an inflation rate of 7, 8, 9%. So the only logical outcome there, if you get over the hurdle that Bitcoin is the measuring stick, it's the chosen measuring stick and it's fixed, then the only possible outcome, the logical outcome versus an exchange rate versus dollars that supply themselves at 7, 8, 9% a year is that over time, the amount of dollars that it takes to buy one Bitcoin will go up and up and up. Hence the exchange rate goes up and up and up. That's the only logical outcome. But even for gold, which has an inflation rate of 2 to 3%, and maybe the price goes up versus dollars and incentivizes more supply, right? So the inflation rate goes up a little bit. That cannot happen with Bitcoin. The only logical outcome, if you've got absolutely perfect money versus something we have used as money before, but it isn't perfect and it has an inflation rate of 2 to 3%, the only logical outcome is that this chart just continues down and down and down and down and down as we find more gold supply. And this is what should happen to the price of everything, including food and houses and everything else, as they become more abundant versus a fixed measuring stick, right? So that is the long-term outcome if you get over the hurdle and you think actually Bitcoin is perfect money. So if you trade Bitcoin, or if you're actually going short the dollar versus Bitcoin, you can trade on Bybit with a big deposit bonus, link below. If you can't trade on Bybit, check out Apex as well, which is their DEX. You can get a deposit bonus and a permanent fee discount by the link below as well. Just connect your wallet and trade. That's all you have to do. I'm James, this is ManageEG. Cheers for watching, and I'll see you in the next one.